Hi, and welcome to the monthly market report for April 22. My name is Gloria Benarosh, and I am thrilled to be here to walk you through the three most important topics of the housing market today. The impact of the rising mortgage rates on the housing market, and then also regarding the spring market update. So I'm going to start right off the bat with the impact of rising home mortgages and also what's happening in general. So as of today, April 7th, 2022, which was Thursday, the interest rate has gone up 1 full percent since March. That's very significant, and it is going to start slowing the market down. A lot of people are going to be asking this question: what's happening? Are the prices going to fall? It happens historically when mortgage rates start to go up, and what has happened in these environments. I'm going to start with a look at how the rates have been rising this year. No surprise, right? So the mortgage rates are on the rise. Freddie Mac, as we said before, is currently at 4.72 as of April 7th. And when we look at the very beginning of the year, or towards the end of the year, December 30th, 2021, the interest rates were 3.11 for the average of a 30-year fixed. But this is the data that Freddie Mac shows, and this is the data. So what does all of this mean? It means that, so what you're looking here is the impact of rising rates on home prices, where the mortgage rates rose by more than 1%. Going all the way back to 1993 of October, that's almost 30 years, and it shows you that there was an average of about 8% appreciation as the mortgage rates were rising, more than 1%. So overall, what we can see is that it does not have a negative impact on home pricing. Let's take it to a little bit further and looking back at the home sales. So we can see here that the average of a decrease of 11% in home sales as they were rising, and we know that the rates that tend to sometimes reduce the buyer's activity. So sometimes it can price people out of the market. Okay, I think fundamentally this is a very different housing market than we have had in some of the previous environments. And so let's take a look at October 93 and December 1994. Mortgage rates increased by 2.38% to a final rate of 9.2%. Now let's be clear, we're not looking at a 2.5% increase in mortgage rates right now. We're not projected to either. It's only gone up 1%. And we're certainly not projected, based on the experts, that we're going to go all the way up to 9.2%. All right, that's what makes the environment different right now. I do want to factor out that we can look at the rising mortgage rates closer and see that what a 0.5% can do. Again, now looking at October, 2005, 2006, all right, there we had the housing crisis and we had the home sales drop by 14%. What we can see here is that when you factor this data, we see that the rising mortgage rates don't have a huge impact on sales. I think one of the big things we have to look at right now is what is available for sale. And currently, that's the inventory component. You know that the inventory today is way lower than it was in January 2021. Keep in mind that this was the historically low amount of inventory. And so in this case here, what we are stating, or what I am stating, is that the home prices are going to continue to rise because the actuality is there are not enough homes for sale. We talk about supply and demand in the environment, and what drives home prices or appreciation, it's the fact that there's a great demand and not enough housing inventory. When we look at the monthly absorption rate, meaning how many months it takes before all of the inventory zeroes out, since August 2021 in Monmouth County, the absorption rate did not go above 1.8 months. So it is extremely a hot market, and even now, March 22, our absorption rate is at 1 month. So properties are not sitting on the market, needless to say, very long, And again, the bottom line is there's not enough homes on the market for buyers to be able to buy. What are some of the experts stating? Well, the director of the National Association of Realtors, Nadia Evangelou, is saying while higher shorter-term interest rates will push up mortgage rates, I expect some of this impact to be mitigated eventually through lower inflation. Thus, I expect the 30-year fixed mortgage rate to continue to rise, although we aren't likely to see the big jumps that occurred over the past few weeks. History suggests that when rates rise, there's an initial bump in home prices as many move quickly to buy a home before rates increase. After that period, home prices start to slow, and the analysis of Freddie Mac shows that 1% increase in mortgage rates results in home appreciation by 4% lower. Basically, with rates rising and expected to continue through 2023, it makes sense to obtain a purchase or refinance the mortgage if you are in good standing. That's the chief economist of Freddie Mac. Now to the spring housing market update. So let's take a look at what some people are saying. Altos Research is saying we keep watching for it, but there are absolutely no signs of a market slowdown anywhere in the data. If anything, we're seeing the market continue to heat up. Currently, again, as I mentioned previously, Monmouth County is at 1 month absorption rate, meaning that there's not enough houses out there for the buyer. If we start looking across the board throughout the whole nation, we see that it is very active. And interesting, if we take a look at the Realtor.com listings, in March, there were 382,000 listings, active listings. That is actually 100,000 shy or short compared to last year. So what's the bottom line to this? We need listings. We have plenty of buyers out there that want to buy, and we just don't have enough inventory. Statisticians are saying that the pending home sales have dropped compared to previous months. My answer to that is it's probably dropped because there aren't enough properties on the market. And so as a result of that, there are not enough sales, and as a result of that, the pending market has dropped. They're saying that 2022, the spring housing market might go down as one of the most competitive on the record. Showings have exceeded pre-pandemic numbers. Monthly price appreciation accelerating per month is now up to 19.2%. This was the fourth largest reading in 35 years of year-over-year percentage change. Next few slides are going to show you the active listings versus the new listings coming on the market. So if you notice, we're in March now, and there are more coming on the market. In regarding the completion of single-family housing units is way below average. Again, I'm sure that also has something to do with the pandemic and the extra costs regarding construction. Other factors is home ownership is a hedge against inflation. So as you can see, the appreciation in real estate compared to the inflation rate is greater. For those of you who are sitting at the sidelines and wondering whether the prices are going to go down, that right now is highly unlikely. There's about 7 experts that we follow, and they're basically saying that that is not going to happen. If we take a look here, the appreciation, if you don't buy now, you may be losing up to $96,000 in equity based on comparing it to the inflation. And then again, what they're stating for 2022, that the appreciation for this year is going to be averaged out at 6.7%. There's nobody right now forecasting prices to go down. No doubt this is going to be a competitive spring market, and we will see price appreciation. I think this appreciation as we go up might be even higher than 6.6%, but again, we won't know until we're finished with the market. I hope this finds you well, and we're grateful to everybody. I am especially grateful to everybody reading my monthly market reports that I send out. So I'll wrap it up, and I hope to see you next time. Thank you for listening in.